Okay, traders, welcome back to the Price Action Labs YouTube channel. So in this video, we're going to be going over a very requested topic that I've been asked, right? How do I balance my day job, my 9 to 5 job, or my personal business when I am trading, right? Can I trade alongside my job, and can I use basic ICT concepts to trade alongside my job? The answer is yes and no. Yes, you can use fair value gaps and liquidity, etc., to trade and to find your entry points. But how do you determine your entry points, and how can you be in and out of the market as accurately as possible with the least amount of risk and the highest reward, right? That comes down to the chart you see on the right, which is the order flow. It's the footprint charts, right? On the 5-minute time frame, the S&P 500 ES, right? ES futures in the New York session, right? So 10 a.m. to 11 a.m. Eastern is when typically the best trades come. I start trading from 9 a.m. to about 11:30 a.m. Eastern Standard Time. Now, that being said, right, let's get into the video now, right? So before we go and look at the footprint charts, it's important to understand the context of this trade, right? So very, very simply put, when I trade, there's only 3 things that I'm looking for. Every one of my trades you'll see in the short form videos and the long form videos, right? Every single one of my trades will have these 3 things, right? It will have some kind of a fair value gap that I sometimes refer to as a key level in price. Once I have a key level, I'm then waiting for price to enter the key level, and I'm validating it with the PO3. So it's entry or entry into the key level plus the power of 3, usually the 4-hour or the daily. Today's going to be a daily power of 3 example, which I'm going to make traders understand. And the last thing I look for is the order flow. Now, order flow is the most important thing, because order flow is what tells you whether your ICT concepts are going to work or they're not going to work. So before we go into this video, I'm just going to clarify why order flow is so important. So step number 3, right? Let's kind of understand how order flow works. Order flow, as you can see with this chart over here, let me just get the Discord up. So as you can see with this chart over here, right? Order flow has 2 numbers attached to it, right? So when traders are trading, right, there's only 2 numbers you have access to, right? It's the bid and the ask. So if you're only trading with the buy and the sell button, right, why aren't you reading who's in control between buyers and sellers, right? So this is exactly what order flow does, right? So order flow is important when you're trading fair value gaps, order blocks, fair value gaps, and I think the other one is probably, I think people trade breakers as well, right? So breakers, fair value gaps, order blocks, fair value gaps, the whole thing is reliant on order flow, right? Order flow is essentially the buyers and the sellers. So if you don't understand order flow, you're setting yourself up to fail, because you don't know who is in control of the market, right? So when we're trading, again, we use these 3 things: fair value gap, entry plus PO3, and then we validate everything with the order flow. So let's kind of go back and look at how this particular trade was taken on ES. Oh, by the way, this is the ATAS platform. I want traders to understand. I often get questions about this as well. So again, in the Discord, all the trades are plugged in the Discord, by the way. So what we do is we have a pre-market game plan. This is not a plug for the Discord. This is more to understand kind of how I trade, and having a pre-market game plan is very important. So if we just look at the pre-market game plan over here, right? So we pre-market were trading above the Asian range. We were significantly above the daily opening price, right? So if we just kind of dive in and look at what was going here on the S&P 500, what's actually going on here, right, is that this is the daily candle, this is the daily opening price. We are significantly, you can say, overextended, right? So the indicators of RSI and MACD that a lot of traders use, that's not the true overextension of the market, right? The true overextension of the market comes down to essentially seeing the daily, and I repeat, the daily PO3. The 4-hour PO3 can be used for intricate lower time frame entries, which is something we're going to get into not so much in this video, but I have made previous videos on that, so I recommend checking out how to use a 4-hour power of 3. But when you are trading, you want to understand your pre-market game plan, right? This is the daily opening price. We are significantly above the daily opening price. And so if we go back to the regular candlestick chart, right, let's kind of break down how this trade was taken, right? So again, I'm waiting for pre-market. This is 9:30 a.m. Eastern. And so let's see what we have, right? Let's see what we have. So the first thing to understand is this. This here was a classic 2-phase manipulation, right? So let me give traders a little bit of detail on how the 2-phase manipulation works. This is the Asian range. Now, the Asian range is responsible for building and generating liquidity, right? We have buy stops above and sell stops at the bottom. So this is the Asian range high, which I'm going to label in red over here. And then the Asian range low is down here. So what we can see is price has taken out that Asian range low, right? Let me mark that out again so traders can see. We have taken out the Asian range low. Now, I like this because this is what I call a manipulation phase 1, right? So we are looking for shorts I was bearish for the session because we are significantly above the daily opening price, right? This is the daily opening price over here. Excuse the last drawing. That was the 4-hour PO3. This is the daily opening price. We're significantly above the daily opening price. Therefore, I am cautious to take buys, even though the overall trend may be to the upside, right? So that's the first thing. When I see price above the daily opening price and we've taken out the Asian range low, this is what I call manipulation phase 1. So I'm just going to write MP1, right? This is manipulation phase 1. We've taken out the Asian range low, which simply means that the market has manipulated or enticed early sellers, right? So these are what we call early sellers, right? You can call them early sellers, or you can call them sell side trap, whatever you want to call it, right? It's a manipulation to the downside. Now that we've come up to the upside, we don't want to be selling blindly, right? We want to use the confirmations to our advantage, right? This is one massive confirmation I use. It's understanding liquidity in terms of manipulation. That's the first thing. Now, the second thing to understand, and I've spoken about this in previous videos, right? This was Monday's high. I want all the traders to go to their chart and I want you to circle the previous day high, right? Or the previous day low if it's a bullish, if it's a bullish case, right? But this is a bearish case, right? So we here have taken out Monday's high. Now, this is Monday's high over here, and I want traders to just draw a second kind of line this way. And so we have taken out, this is what we call the PDL, right? Previous day high sweep, right? PDH, right? Previous day high sweep. Now, when you have a previous day high sweep, what does that mean, right? What does that mean? This is simply a sweep of liquidity. So we've taken out the Asian range high as well as the previous day high. These two liquidity sweeps are absolutely necessary if you are trading, right? You cannot trade without liquidity, and you need to understand Asian liquidity and previous day high liquidity. In fact, a very, very simple way to trade, this is slightly oversimplified, but a very simple way to trade is to simply trade when price is going higher, then wait for a sweep, previous day high, and then from here you can either trade off a fair value gap or an inverse lower. And this is basically how the trade is forming, right? This is slightly oversimplified, and the reason why you sometimes hit and miss with the strategy is what we're going to go over. It's hit and miss because your trading is essentially hit and miss, right? You're not using order flow to your advantage. So by using order flow, you can essentially get ahead of the move before the move happens. And this is something we're going to break down, right? So once I've had a sip of the coffee, we're going to understand and break this down. So let's go to the 5-minute time frame. So on the 5-minute time frame, I am searching for the local fair value gap. A local fair value gap, as the name suggests, is the nearest fair value gap. So what I'm not looking for, right? I see a lot of traders making this amateur mistake, right? Where they start marking out the high, the low, and the high. Now, structure is hit and miss. Right, and I'm going to explain to you, right? Structure is hit and miss because sometimes you get the break of structure, sometimes you don't get the break of structure. How can you accurately enter moves with high risk, if you want to put on risk, and a high confidence, which is the most important thing? So we have a break of structure over here, right? And then we can see the market actually gives us a break to the upside, right? So we get a break to the upside, then we end up getting this massive selling to the downside. Now, what I want traders to understand is how I was going over this candle by candle by candle. So this is now 9:25, 9:30 a.m. Eastern, right? The market opens up with a bullish fair value gap. All right, here we are, bullish fair value gap, just like this. And so to give you some context, let me just take the PO3 tool out of the way, right? To give you some context on the Discord during our pre-market game plan analysis, what I was personally looking at was, okay, so this was at 14:47, so that's going to be 9:47 a.m. Eastern Standard Time, right? So here we have a 15-minute fair value gap that's formed on the S&P 500. And so if we go back here to the general ES chart, right, this is, again, the refined 5-minute fair value gap. And so when we're at a fair value gap like this, right, let me label this. This is step 1, right? Step 1, which is just your M5 fair value gap, right? It's as simple as that. Now, when you have an M5 fair value gap, there's only two things the market can do from this position, right? The market can either go up or it can go down. Those are the only two options you have, right? So either the markets can go up or the markets can go down. And so how do we determine that? So we've already done step 1, right? So step 1, we've identified a fair value gap. Step 2 has kind of been complete now because we've entered this fair value gap. So we know the markets can move up or they can move down. Now, what's important to understand also is we're above the daily opening price. And so this is the daily opening price, right? It's this kind of line over here that you can see, this long line. This is the daily opening price. This is New York, right? This is midnight New York time /EST. This time is very important, and it's very simple to use as well, right? The market will move in a certain way, all right? So the market will open. This is the daily opening price. We will see price expanding to the upside, just like this. And then from here, we will come into some kind of a resistance, and this is the daily opening price. And so what you're doing is you're looking to sell back to the daily opening price. That's all you're doing, right? So the question is, how do we know what's going on in this circled region over here, right? That is what separates ICT traders from profitable traders, right? That's what separates ICT traders from profitable traders. So it's about understanding what's going on inside of the key level. And so once you have a key level, and you're above the daily opening price, so you know you should be looking for sells. Now we can head down to the 1 minute time frame. And so on the 1 minute time frame, we're going to be breaking this down, right? So now that we've had a break below this zone. So what you need to understand as a trader now is a few things, right? When price comes back into this zone, right? So we see price coming into the zone, right? So in order for us to take sells to the downside, we need to understand what is going on with price, right? What is going on over here? And so this is where the order flow becomes very important, right? So order flow, right? What are we looking at? So let's just go to the order flow footprint charts and let's kind of break how I was looking at this, right? So if we continue to go down, again, let's take a look. So this is the exact same fair value gap on ES over here, right? The exact same. And so when we break this down from a strategic standpoint, right, what we can see is we can see a huge amount of heavy aggressive selling coming into the zone. What's important is you see the high of the day over here, right? The high of the day, we can see a significant amount of buying volume. The reason it is buying volume is because we can see a blue delta. And so when we dive into these candles over here, I want traders to understand what we mean by, I want traders to understand what we mean by kind of blue delta. And so what blue delta represents, right, essentially is this, right? The blue delta itself will represent the fact that there's more aggressive buyers than sellers, right? So again, this candle over here, when we zoom into the price action, we see 399 for 706, we see 37 for 244, and we also see 0 for 16 at the top. So these three kind of candles I'm showing you are incredibly important when it came to forming this trade. We saw huge buying and we saw a finished auction at the top. So a finished auction, I want you to understand it like this, right? So a 0 and a 16, right? The 16 is on the right hand side. That represents the bid and ask. So that represents the ask, right? The ask is on the right. When you see a 0, what that means is that the auction between buyers and sellers, i.e. the bid and the ask, has been wiped out. A 0 means the auction has been wiped out, and therefore that then increases the likelihood of price not returning to that area. That's what you can consider a high probability reversal, right? Not by using liquidity sweeps alone or fair value gaps. It's using the order flow to determine two things, basically. First of all, we see a lot of heavy aggressive sellers and we see a finished auction. That means that the market is less likely to reach this area again, and the buyers have failed, which means therefore by default sellers are in control at this stage, right? This is what's interesting. This was a large red candle, but we had some positive delta at the top. In fact, we had 36 for 119. Despite having a massive red candle to the downside, buyers were present in the candle. Buyers were aggressive in the candle. So if you see a red candle, but buyers are aggressive in that candle, that shows you price is moving down despite buyers trying to move the market up. So buyers are failing in this region, right? The terminology we use is absorption, right? Aggressive buyers are being absorbed by passive sellers, right? We understand passive sellers are sitting in this region. And so passive sellers simply represent why the market moves down in the first place. And so when we kind of dive in and we start looking at the entry, again, this entry was just under $300, time of close was just over this level over here. What I want traders to understand is more so the delta and what's going on, because I get a lot of questions about this, right? This is the fair value gap over here, round about this on ES was 59.35. So I want traders to go back and study, right, on the, what's the date today, 28th of May. I want traders to go back and study 59.35, 59.34 area. Go and study what you saw between aggressive buyers and aggressive sellers, right? So this here is the order flow. This represents the fair value gap. Now, when we go back to the overall footprint charts, right? We saw multiple retests into this area before the market eventually sold off, right? And we saw the market kind of selling off around kind of 10 a.m. Eastern, you know, just after 10 a.m. Eastern. So what's going on is I wanted to put my stop loss here, and where was I targeting, right? Very good question. Always important, right? I had a question on the channel. Where do you target? Where do you get into trades? Where do you get out of trades, right? Very, very important question. So do you see how here in London we had a fair value gap? So this is now the POI. POI is the last candle before the fair value gap. And so I am targeting the next 15-minute fair value gap, right? I like to be in and out of my trades within an hour, hour and a half within the New York session itself. So this was just under a 2R risk to reward. And so I don't want traders to focus on the actual outcome of the trade. Of course, yes, price did rally to the downside. We saw price hitting our TP towards the end. A pretty choppy session. I didn't personally like the session that much, but yep, we saw price hitting the session, right? Probably because we had FOMC later, right? So there is the trade itself. There is a scalp you could have taken. Now, I want to focus on the price action you saw basically here. All right, so I'm going to label this in yellow. This is at the fair value gap, i.e. this is at the key level, right? What is going on here? Right, what is going on here? So this is time of recording. This was around just before 10 a.m. Eastern and just after 10 a.m. Eastern, right? This is about a 10-minute period. 10 minutes to 15 minutes is what you need to focus attention to understand who is in control between buyers and sellers. So let's go back. Let's actually put these charts side by side here, right? So let's just give us a sec to do this. Let's put these charts side by side, right? Because this is where the power is going to come, in my opinion. And so when you have order flow in this way, right, I am going to show traders the yellow box, right? We want traders to focus on the yellow box, and I am going to show traders exactly what was going on inside of that yellow box. And so let's kind of look over here. So here we have the same charts, right? This is the 1 minute, this is the 5 minute, right? You can just trade off the 5 minute, and I want traders to understand this, right? Look at how price was behaving inside of the fair value gap, right? I want traders to understand and focus on this. Again, we have blue delta, similar to the high of the day. We have blue delta. We have significant blue delta. When you see blue delta, that means aggressive buyers are present, right? The ask is greater than the bid, right? The left number over here, in fact, let's just break down a few examples, right? These two candles over here are interesting, right? We saw here 54 for 236. We saw 344 for 585. And then over here, we saw 53 for 114. We saw 401 for 660. So you can see that the right number is greater than the left number. That means that there's more aggressive buyers than there are aggressive sellers. And so I want you to ask yourself, in this region, if aggressive buyers were present, right? So aggressive buyers are hitting the ask, right? They are trying to drive price higher and higher and higher. So they're trying to do this. Now, you need to ask yourself a couple of things, right? If these aggressive buyers in this region are failing, what does that tell you about this zone, right? What does the order flow from the footprint charts tell you about this zone, right? What does the order flow tell you? Well, the order flow is telling you a couple of things, right? So the order flow is telling you that the ask is a lot greater than the bid. And so if the ask is a lot greater than the bid, that means that there's more aggressive buyers. Now, if these aggressive buyers do not break above the level, right? A level can be an order block, a fair value gap, a point of interest, in this case, a supply zone. It can be a demand zone for a flip area. When you see this, it's basically showing you an absorption, right? I'm just going to write ABS, right? An absorption of buyers, right? So buyers are being absorbed. Therefore, passive sellers are present, right? So there's no such thing as more buyers than sellers, more sellers than buyers, right? For every buyer, there's a seller. For every seller, there's a buyer. So here are the order flow footprint charts on the right-hand side. The number on the right may be bigger than the left, but that doesn't mean there's more buyers and sellers. That means there's more aggressive buyers and sellers. So what we need to understand is that there's passive sellers sitting in this region, right? And it's passive sellers that drive the market down, not anything else, not a liquidity sweep or a fair value gap or anything like that. It is simply the passive buyers that are driving price down. So again, what's going on over here? We can see price entering. We saw price entering. We saw huge blue delta, blue delta, blue delta, and blue delta before the market eventually sold off like this. When you see blue delta with no reward, it means that the ask is greater than the bid. There's an absorption of buyers, which means that passive sellers are present, and it's passive sellers that actually create a supply area or a resistance area that drive price down. And so this is the most important thing I want traders to understand, right? With this overall case study, right? Yes, order flow is important and you need order flow, but order flow is very important with ICT concepts, right? So the ICT side of things is quite simple. Here's the New York midnight opening price. You want to be selling above the New York midnight opening price, and you're just targeting the next fair value gap. What allows you to target the fair value gap accurately is using the order flow and ICT concepts to your advantage. And on that note, if you like this video, give it a like, give it a thumbs up, and I look forward to seeing all of you in the next one.